We've got Vipul Prasad as well joining in. And Vipul, we've put the halt to the 3-day winning streak on the frontliners, but that's not what's as worrying as what's going on with the broader end of the market. Day after day, the mid-caps being butchered out of shape. And while most of the experts say it's, one has to be very stock-specific, can you just highlight where exactly it is that you're finding opportunity and value within the broader end of the market?
Yeah, good afternoon. So see, one has to remember that even the Nifty 50 itself is at quite elevated levels as far as P valuation multiples go. At the same time, one can argue, we have heard this from many people, that yes, mid caps and small caps, after very poor performance in the last 18 months, many of them have become quite attractive. So stock specific, yes, we can talk about, but in absolute terms, if you see the mid cap and small cap indices, they're still not at compelling valuations. And on the top of that, if you also take into account the fact that we are seeing a slowdown in many sectors right now in the economy, and also there are some risks in terms of China-US trade war that is still persisting. So in this backdrop, I still feel that it is no more time, not yet time to do sort of basket buying for mid caps or small caps. So if you ask me, the way we are going about it is that for us, most of our, although we are bottom-up investors, we follow bottom-up style, but most of our stock picks happen to be in the large cap space, and in fact we find it easier at this juncture, at least from us 9 to 12 months perspective, to find to look at large cap space. Of course, this is not to say that there are no stocks in mid caps and small caps, small cap universe. There are some stocks, but then one has to be very clear on corporate governance, one has to be very specific on the balance sheet quality. So yeah, there'll be very few stocks in that category, so as to say. In terms of sector, but again, not specific to small caps and mid caps, most of our top stock picks happen to be in banking, infrastructure, and consumer staples.
Right. In banking, what are the picks that you have?
We are quite in awe of HDFC Bank, so that continues. At the same time, we also like the strong turnaround in SBI that has happened, and in our view, this turnaround will gain in further strength. We still have to see further improvement in balance sheet as well as in their business growth. So basically, net interest margins, NII growth is going to improve further, trajectory is going to improve further. Of course, one can have a counter argument that yes, the stock has done quite well, but we also must remember that versus historical valuations or versus its private sector peers, it is still quite attractive, especially given the fact that the kind of improvement that it is likely to have in the next 1.5 to 2 years. And one more stock that is worth adding is Axis Bank. That also was in quite a lot of trouble as far as their corporate loan book was concerned. But the game plan is very clearly working for them to improve their return ratios, and also the kind of recoveries that they're having in some of their written off accounts, that also is quite encouraging. So Axis Bank also looks good, but again, this also is not at compelling valuations. But having said that, it's not very expensive also. So one has to look at this in the valuation price to book ratios around around 3. So that has to be looked at in the context of the book value growth that this company can offer, and the kind of earnings growth that this company can show in the next 2-3 years.
Okay, Manas, come in on the charts. BEL, Bharat Forge, Ashok Leyland, all under a bit of pressure this afternoon.
See, in BL, very clearly stock has broken its 200-day and 100-day moving average, and we have seen a lot of selling pressure, I think, in last 3 weeks time. Now stock has been a confirmation of lower top and lower bottoms. So looking at the fresh breakdown, I think the stock can again go and test its previous low of 80 to 75 rupees. So I think one should be very much cautious in BEL. I think if you're a trader, then even at current levels, you can create some short position over here and keep the stop loss above 102. In Ashok Leyland, I think most of the auto stocks are looking weak on the charts, and looking at the pattern, because we saw some pullback just 2-3 days back in Ashok Leyland, but the stock could not sustain above 20-day moving average, and we have seen selling pressure. Today stock has given a fresh breakdown below 82 rupees. So look at the pattern, because the stock was moving sideways in the range of 95 and 80 rupees for quite some time. I think this time it can break the support of 80 rupees and it can go down and test 70 to 73 rupees. So one should be very much cautious over here. Take a short call here. Stop loss should be around 85 rupees. And in Bharat Forge, I think now you can create short position, because stock was facing resistance near to its 100-day moving average. But today stock has given a fresh breakdown below 460, 450 levels. So looking at the pattern, I think here also you can see more downside, because the trend is negative on the medium term charts. Also stock has been making lower top and lower bottoms. So in auto ancillary and auto stocks, I think one should be very much cautious. Here also I think the stock can go down and test 400, 410 mark.
Vipul, what else are you tracking in terms of earnings? We're still watching out for some of the key cement names, and overall the mood has been positive towards cement as well. Some of the counters there. Anything specific you're looking at?
Actually, cement, it's quite a mixed set of indicators that at least we are getting. So volumes, yes, they can be good, but again, depending on the regions that we are talking about. Pricing on a YY basis, yes, it's decent. And if you look at the bigger picture, the kind of thrust that the government is putting on infrastructure, and the government is also talking a lot about affordable housing. So from that sense, you can say that yes, demand growth is going to be very strong for cement companies. But we also have to remember that utilizations are still not too great. I mean, they're still in 70s. Of course, they have improved a little bit. But in this scenario wherein you already have some amount of price increases that have already happened. So incremental price increase, I'm not very sure about. You can have some decent volume growth, but that itself may not be able to pull up the stocks further, given the kind of valuation that we are seeing, especially in some of the big names, some of the quality names. So that's why we are keeping away from the sector right now.
All right, that's the take coming in. In the meantime, Kunal, we were talking about the specialty chemical sector, identifying some of the companies. What about from a chart perspective? What is it that looks good?
So I think if particularly you're talking about Sudarshan Chemical, I think that stock, then maybe I think the stock could see some bit of short-term upside, but it's not a stock which has been into the thick of uptrend. I think from the 52-week highs, which was closer to 630 levels, it's also been one of the few mid-cap names which has corrected 45-50% from those kind of highs. So it's a very similar category stock as compared to many of these other mid-cap names. There's nothing special in terms of the price patterns as such on the short-term charts as well. So except for the last 2 days or 3 days where you've seen some extremely high volume pickup and the price is trying to halt the decline, I think there's nothing else which has been notable in that stock, but particularly.
Right. So just take a look at the markets. We're on the brink of breaching 11,600 now on the downside, 260 points off on the Sensex. It's hard and fast in terms of the crack for the broader end of the market. It is those PSU banks which is the biggest culprit, but infrastructure, autos, everything is weak in trade. Yes Bank back down to 13%. Vodafone Idea under pressure. BOB down nearly 5%. Ashok Leyland, DLF, Tata Motors, ONGC, Vedanta. Those are all of the large caps having Nifty 100 names having a bit of a rough run this afternoon. Dr. Narayan, let's get in your take on the index at the brink of breaching 11,600 on the Nifty. Where do we go from here?
Well, I think it's largely the pressure that is being mounted on the bank Nifty, and that's really dragging the Nifty down in its wake as well. My sense is that this is related to the weekly expiry of the bank Nifty, and the way I read it is that substantial long positions by way of short puts had got created yesterday, all the way down from 30,700 down to 3,500, and I would believe that a lot of this came from weak hands. Now, weak hands do not surrender so quickly, particularly on the last day, because hope really beats in their hearts right down till the closing bell, and I think they are getting pushed aside rather mercilessly right now. And in the wake of some large cap banking stocks being hit down to push the bank Nifty down, I think that's taking its toll on the Nifty itself, where also some individual heavyweight stocks are also going down. So collectively, this is, I would believe, a function of the weekly expiry and may not reflect in the prices or in the sentiments tomorrow. So those who are caught in this vortex have to pay the price, but the rest of the people, I think, should simply stand by the wayside and allow this storm to pass.
What will be your view on Titan? Of course, it's recovered from the day's low, but it's down about 3% still. What will be your view on that name?
Well, I think everybody had got completely bullish on Titan. Is that for me?
Right, Dr. Narayan.
Hello?
Yeah, Dr. Narayan, go ahead.
Yeah, I think everybody had got bullish on Titan, because it was saying this rather inexorable looking uptrend, and then suddenly those comments from the management came out of the blue, and that saw some let's say pretty alert traders getting into the game. This then got combined with some position unloading which continues into this day. And after having seen that big uptrend, people were looking for places to buy, and they thought when it reached down to near 1100 zones, that point had been reached, but that does not seem to be the case as renewed selling continues in this counter. So perhaps another 100 points down before it rights itself. So around 1000, I think stocks should definitely find more willing buyers who are willing to buy and hold on to their position rather than just bargain hunters and bottom fishers.
Okay. Now, SEBI doesn't seem to be in the mood to transfer surplus funds to the government. The chairman has written a letter to the PMO and Finance Ministry to reconsider the budget proposal which was made by Nirmala Sitharaman in her maiden budget. Now, we've also got brokers and employee unions all are protesting against this and asking the Finance Ministry to reconsider. Rahul joins us with more on this story. Rahul?
Raised by our market regulator SEBI, and SEBI has written a letter to Finance Minister and PMO to reconsider the proposal which was been made in the maiden budget of Nirmala Sitharaman to transfer the surplus 25% fund in the Consolidated Fund of India. Well, not only SEBI chairman but employees union of SEBI and brokers have also written a letter to Finance Minister and Prime Minister office, and we will go one by one what they have written in the letter. The SEBI chairman to Government of India, it has written the proposed move would affect the capital market and functioning of SEBI, and he has explained the rationale behind this behind this entire surplus fund, how it is used. While the SEBI employees union in a very candid letter, they have written to PMO that transfer of the surplus SEBI general fund to the consolidated fund, and after that, in case of any fund requirement, they will have to ask and take permission from the Finance Minister is very problematic, and it's a very surprising decision. And in fact, proposed amendment are regressive in nature and they are against the spirit of SEBI Act 1992. Well, brokers have also written a letter to Prime Minister office, and they have written that the proposal could lead to government interference in day-to-day functioning of SEBI, and the fund of Consolidated Fund of India will not be used for the development in capital market. Well, let me tell you that brokers are not in a mood to give the money which is being raised by the capital market should not be used anywhere else. So all three people, the SEBI chairman, SEBI employees union and brokers, are not in a favor to transfer the extra surplus cash to Consolidated Fund of India.
Okay, thanks for that, Rahul. All right, Vipul, let's take a look at some of the other movers as well today and just get a sense from you on what else you're tracking. It really does seem to center around earnings, because on the consumption front, things are still incredibly quiet. What's your sense in terms of when we may see the pickup? Let's talk about the FMCG or staples space in particular, because we haven't had the best of commentary coming in from most of the managements there.
Yeah, that's true. If beginning February itself, the management commentary had been deteriorating actually, and we saw that. And except for maybe a couple of companies, the results did show that the revenues, especially led by the volumes, they were deteriorating, and also the margins also took some pressure. From here, I suspect that another 2 quarters will have to live with these kind of earnings. Maybe expectations will be scaled down, and to some extent along with that, hopefully the stocks also probably will come down to more attractive levels. But I suspect that early 2020 calendar year, we should have some factors that should again start lifting up the sentiments. It'll be driven largely by cyclicality. And we also think that the government's thrust on rural economy is still to show up. The kind of allocation that the government has made for agricultural and allied activities, that is really stupendous. So I think that will start showing in numbers. Secondly, we also expect some more rate cuts to happen, policy rate cuts in the next 6 months. And probably along with some better transmission, this should mean that in the hands of the consumers, we'll see better availability and better cost of credit. So all these things should combine to at least bring about a bottom in sentiments as well as in consumer buying. And this should mean that earnings trajectory, especially for these companies, should start improving again. So we are talking about sometime in the March quarter. And that's where I'm thinking that probably once we start seeing some sort of a rebound in the growth trends, we should again start going back to the earlier kind of status wherein these were the traditional defensive names, and more money will be attracted to them. So from a 1 year perspective, I do like some of these stocks, and especially those companies which have some potent levers that they can use to enhance or at least protect their margins. For example, if some company has the ability to reduce costs further, or maybe some company is doing product premiumization, which means not just volumes but also average pricing will move up, which means margin should improve. So yeah, as a sector, probably I don't know, but there'll be some companies which will show decent performance over the next 1 year perspective.
Okay, that's the take coming in on FMCG. In fact, Dr. Narayan, you had done an interesting analysis on PNG and spoken about the overall outlook on the charts. What about some of the other names within this space? Are you observing any interesting trends within consumption?
Well, I think FMCG index was tending to look up, just like pharma was. The move up in pharma index was better compared to this, but still, you have stocks within that, particularly the MNC stocks, which are probably seen in this market as something of a defensive or as something of an island in the sea where one could take a little bit of refuge. And so therefore you are having the Nestle, the Procter & Gamble, the Britannia, Colgate Palmolive, Hindustan Liver while we are at it. And I think these are the kind of stocks which are meeting up with some buying, and that seems to be largely of a defensive nature. Now, whether that is coming in from mutual funds and PMS related buying, because the other kind of stocks they are unable to sell, and the incremental money which is still pouring into the funds, they have to be parked somewhere. So I think these are the stocks they are finding their way to. So these have been the traditional safety valves for the market, and I do believe in this current juncture where people are finding it very tough to put in money anywhere, these are stocks which are being elected to be the safety valves, as I said earlier. I think that is what is driving all these stocks, and they'll probably continue to drive it a little further also.
Right. What will be your view on MINDTREE, Kunal? MINDTREE is down some 9%, and if I'm not wrong, it went down 20% earlier after the open offer went away. Any view particularly on MINDTREE, not about the index?
Not really, Pankaj. I think it's just about that the stock is going through extreme selling. This is the 4th or the 5th straight week of selling from 1,000 levels. where the stock remained sideways for almost 2 or 3 months or 3-4 months.
Yeah, see, there was an open offer. So
Yeah.
that open offer price was maintained till the open offer got over. Then it came down to 760 odd levels. But then this move is coming in after the results.
Correct.
Now, what does this move suggest? The fresh move which has come today.
So it's not a suggestion that the stock is trying to find a bottom, because when you see such heightened volumes with the stock opening gap down and then trading lower throughout the trading session, and the volumes keep on rising up higher, it indicates that there is more of liquidation which is happening, or more of delivery-based selling which is happening into these stocks. And when you see delivery-based sellings into these names which have been down last 3-4 weeks, and then further seeing another round of selling pressure, these stocks don't tend to lift off immediately. They go through a prolonged consolidation, and then you see the stocks going through a gradual downward drift. Case in point, a very similar chart was I think Maruti, just a few months back, when the stock was at 65-6700. So I believe Mindtree could be very similar to that
stock
prospect.
you said?
Maruti.
Maruti, okay.
Yeah, so I think the stock could now be very similar. Mindtree could be very similar in that prospect. I would expect the stock could remain into at least a 1.5 odd month consolidation. But the trend or the force of this trend, which in the last 4 weeks have panned out for the stock, should result into more downside.
Right. Vipul, what will be your view on, some of these new financial names? So HDFC, AMC is constantly going up. You have some of these insurance companies that are going up. Any view on some of these names?
Actually, I haven't looked at these names because our exposure is already quite high in the financial services sector, basically because of the large corporate banks, including HDFC Bank itself. So honestly, I haven't looked at these names.
All right, we'll let you go on that note. Thanks very much for joining in with your market outlook.